What's the difference between active and passive real estate investing? If you're thinking about investing in apartment buildings, which role is best for you? That is exactly what I'm covering in today's video. So make sure you hit the subscribe button right now so you don't miss more videos about building wealth through multifamily real estate. I'm Seth Ferguson. Let's get right into it and talk about active versus passive real estate investing. And to help us break down active and passive investing, we're going to focus on four main things. The first one is going to be risk. Then we have time and effort. Then we have skill. And then we have control. These are going to be our four main differentiators, and we're going to compare the two. So let's put active over here and then passive over on this side. And as a quick reminder, we really only have four ways of buying or investing in apartment buildings. We can number one, buy it ourselves. Number two, we can joint venture or partner with somebody on it. Number three, we can invest or syndicate the deal, or then we can either invest in a fund or launch a fund ourselves. Those are really the four main ways we can do it. And we'll kind of mention these as we go through active versus passive and these four components. So with risk, how much risk exposure are we taking? Well, with active investing, our risk is actually unlimited. What that means is, our risk has no bottom. So let's say we invest $1 million in a deal and we're on the active side. Our risk exposure doesn't stop at that $1 million. If something really goes wrong, all the creditors can come after us for 10 million, 20, 30 million and really take our personal assets, and we're risking everything. Our risk is unlimited in this case. If we're taking a true passive investing role, our risk is what is called limited, which means if you are investing $100,000 in a deal, you are risking that $100,000 just like you would if you bought a stock. Let's say, the stock can go to zero, but that is all you're risking. Your risk is not unlimited. Now let's talk about time and effort, right? When you're active, you are devoting an exceptional amount of time and effort to researching the markets, building those relationships, learning about the area, hunting the deal, finding the deal, negotiating the deal, getting it under contract, getting it through to a firm deal, and then you have to raise the money, then you have to manage the deal, then you have to make all the decisions, what rentals to do, when to raise rents, when to sell, all of those things. So your time and effort, I will put a big arrow up here for a whole lot of time and effort. Now, on the passive side, if you are truly passively investing a deal through a syndication or a fund, your time and effort is minimal, right? You're going to review the deal and decide whether or not it is a good deal for you to invest in, or if the fund meets your criteria or it does not. That's time and effort spent doing that. Once your capital is invested in the deal, you're not making any decisions. You are not spending the time or the effort. Sure, you're going to get updates on the deal, whether it's monthly or quarterly, depending on the type of syndicator or the fund that you're invested with. For myself, I really like communicating quite a bit with my investors, but you're not going to be, making active decisions. You're not going to be, worrying about something that went wrong in the deal. You're going to be totally passive. So the amount of time and effort that you need to spend in the deal is very low. And that's why a lot of business owners, professionals like to invest in these types of deals because you can focus on exactly what you're doing best on a day-to-day role, right? That's your career. That's the business you're building. You don't have to worry about the other business or starting another business from scratch, which is real estate, right? You can focus on what you do best. That's your bread and butter. And then somebody else, a real estate professional, will be running the deal for you and will be sending you the checks. Now let's talk about skill. To effectively and efficiently and successfully run an apartment deal, you need a tremendous amount of skill and experience and the team members under you, right? It takes a team to do these deals. You need a tremendous amount of skill. So I'll do 3 arrows up here. A ton, right? To find the deal, to underwrite the deal, to know which deal to do, to know what to do in the deal to make it successful, to have the pulse of the market, to know when to push, when not to push in terms of rents and upgrades, and what happens if something happens in the economy. What exactly are you going to do to weather the storm? A tremendous amount of skill. Plus, let's say you're running, you've raised $30 million. You have to make sure you are doing right by your investors. So a lot of skill is required here. Now, on the truly passive side, you don't need a whole lot of skill, right? Nobody's expecting you as a passive investor to be a spreadsheet wizard. Nobody's expecting you to have a long track record in real estate. I always suggest you know the basics of the deal, right? How is value created in the deal? What does the deal look like? Sort of things to expect. What are the actions that are going to be taken in the value add business plan to create that value? These are the things you should know, but nobody's expecting you to dig through the underwriting and really understand the entirety of the 5-year business plan and exactly what's going on. That's not expected. So the level of skill is actually quite low, right? You need to be educated about how real estate works, generally speaking, how the deal's going to be run, generally speaking. You want to know about the markets and ask questions about how the deal's going to work, but you don't have to have a high degree of skill like somebody does who is active running the deal and making all the big decisions. And last but not least, we have control. Who is actually running the deal? And I kind of gave you the answer to this in when I was explaining skill, right? The active partner is controlling the deal. They are making all the decisions. So I'll say full control right here. These are the people making the decisions. An active person runs the deal. On the passive side, they are bringing their capital into the deal, but they are not making decisions. So I will say limited control. There are a couple exceptions. I don't want to get into the weeds here, but generally speaking, the passive investors are not making decisions in the deal, right? That they are along for the ride. They're investing their capital. They are trusting the active partner, and the active partner will then go out and make the right decisions to make sure that the project is successful. So remember the 4 ways that I mentioned that you can actually buy or invest in apartments? I want to talk about those a little bit, right? So on the active side, you can buy it yourself, or you'll run the deal yourself, you'll buy it, do all that stuff, or you can JV or partner with somebody. Now, I put these under the active side because your risk is unlimited. The time and effort you're spending over here is quite high. You need a high degree of skill to do this, and then you have full control. A lot of times, and I've done videos about this before, a lot of people will have a 2-person partnership. One person will bring the money, the other person will actually roll up their sleeves and make the decisions. There's a very dangerous misconception that is passive investing on the part of the money partner. That could be that's the furthest thing from the truth, because both people involved in that type of situation, their risk is unlimited. There is no passive investing if you are signing on the loan and just bringing in the money. Your risk is unlimited in that case. So for the ways that you can be active, there's these 2. Now on the passive side, you can invest in what's called a syndication. And then you can also invest in a fund. Now, I'll put a link right up here to a video I did explaining the difference between a syndication and a fund. Now, on the flip side, if you're active and you are a general partner, you are the fund manager, you can also run a syndication or a fund, but you're the person running it. You're not the person passively investing. Now, definitely check out that video if you are interested in learning more about the nitty-gritty and how everything's structured and how everything works together in a syndication or a fund. But for today's topic, the difference between active and passive investing, we just focus on 4 things. Remember, it's risk, time and effort, skill, and control. And we have gone through what's involved on the active side and what's involved in the passive side. So now you have to decide, okay, with my real estate goals, where I want to go with my portfolio, with how I'm actually earning my bread and butter today, my time, am I willing to take the risk or not? Do I want to devote the time and effort or not? Do I have the skill required? And do I need the control? These are all decisions that you have to think about yourself in deciding whether or not you want to be on the active side or the passive side of the equation. And if you're interested in getting into multifamily real estate, if you want to do your first deal, I want to give you a free blueprint, totally free. It's called the SPY formula, and I'll walk you through the 3 different phases of getting to your first apartment deal. Just go to spyformula.com and you can download the blueprint for free, and it will take you through it. I even have a video for you explaining more in depth about it. So if you like this video, if you found it useful, hit the like button, leave a comment, let me know what you think. It really helps out the channel. And until next time, happy investing.